Hello, this is Seewing Yee from the Yee Real Estate Network. I'd like to take this opportunity to share with my members and investors concerning the most current Forbes magazine in terms of the fastest growing cities, the latest numbers. Okay? And then I will share with you how this list relates to the market that we're promoting. All right. So anyway, the premise behind this research, as you know, Forbes magazine has been it's a very credible source. They always track the numbers in terms of uh, population growth, job growth, and then they always comes up with the top 15 or so on an annual listing of fastest growing cities in the country. And the premise behind their data, they're talking about, here's a paragraph stating that Americans, especially from since the downturn back in 2009 to 2011, most Americans are clustered in the dense cities and then to the urban core. The 2015 census population confirmed that the migration of Americans is really into the uh, urban areas. As you can see here, migration to lower density, lower cost metropolitan areas, largely in the South and the West, and most of all, Texas. Just so you know, now you know the reason why we as a real estate network does not, for the most part, any longer promote the Midwest area. I mean the cold weather area, right? The Midwest, like whatever, Missouri, Indiana, Ohio, Pennsylvania. Those are blue collar states. Those are what you call it. They are there's what you call a rust belt states because of the cold weather, because of the migration of young people. Everybody is moving towards the south, southwest, and southeast of the U.S. and for the for this coming generation and beyond. Why? Because it is the sun belt. People like warm weather. That's where the job growth is at. That's where the migration is going for from now on. For well, not from now on, but it has been for a while. But even more so, especially with the millennials that are migrating to the good areas where there are a lot of jobs and good quality of life, which is basically in the south, southeast, and southwest. Now, further, the reason why I do not necessarily, promote Southwest because the price is too high, right? As an investor, the criteria that we use is basically the rent to value ratio. As many of you know, if you've been listening to my training videos all these years, I promote the 1% rule. This means if, the, if you look at the purchase price of a home, for example, $150,000 of a single family home residential investment property, 1% or a little bit less perhaps, multiplied by 150,000 equals 1,500. The 1,500 should be the estimated monthly gross rent. That's what I call the 1% ratio. And the reason why I do not want to promote in California or for the most part Southwest, because the median price of those homes are $300,000 and $400,000 or even higher. In California, it's about a million. In the Bay Area, it's like a million or even more, right? So how could you apply the ratio, rent to value ratio of 1%? If you buy a property in Bay Area, which most of our investors live in, for $1 million single family home as an investment, multiply by 1%, how are you going to be able to demand $10,000 in monthly rent to achieve cash flow, right? It doesn't not make sense. So for the most part, the Midwest, which is a as far as I'm concerned, is a dying population, right? People are moving away from there, migrating. And of course, so let's eliminate the Midwest from our investment criteria, and might as well eliminate most of the Southwest as well. Even Las Vegas and Arizona, Phoenix area that used to be a real good cash flow investment, single family homes a few years back, 5, 6, 7 years ago, during the recovery of the downturn, but where you can get cash flow in way below market price through the foreclosure crisis, but not any longer. So I'm sure you agree. Let's eliminate California as an investment potential for most of our cookie cutter, mom and pop investors that you are, right? For the lack of a better term. So, and because you can add cash flow. So the sweet spot, at least for single family home investing, are around 150 to $200,000, where you can get a little bit less than 1% rent to price ratio to achieve positive cash flow based on 20 to 25% down payment with financing. Make sense? So really, we eliminated the Midwest. Yeah, Midwest, you make cash flow here and there. That's fine. But most of those homes for investment are very old, about 100 years old, right? Who want to buy an old house? Another, we never validate something else. Now you know why. If you look at other investment homes that are promoted by others in the Midwest area, they always promote homes built in 1920s, 1940s, 1950s. Yeah, there's a reason why you're buying those old homes, because in the Midwest area, they are not growing, most of those cities. So you're not going to buy new construction. When you buy new builds, new construction, single family homes, it tells us that the area is growing. Otherwise, the builder wouldn't build new homes to accommodate in the influx of people. All right. So, and of course, once again, let me conclude by saying, don't buy Midwest, because you're not going to see fast appreciation. You're not going to see growth to the extent that you will in the South and Southeast. So eliminate the Midwest, eliminate the West, right? Because the price is way too high. You can't cash flow. I mean, so overvalued, so expensive in the West, in California, and what have you. So let's concentrate, right? We're doing the process of elimination. Let's concentrate on South and Southeast. Okay, so clearly Texas is has been the fastest growing state in the country, and will be for a while in the 10, 20, 30 years down the road. Similarly with Florida, right? Florida is way below market value. They are recovering from the economic and real estate crisis slower than other states. So which is good for us, right? You're still able to buy undervalued, below market value investment homes, especially in Florida, especially in Central Florida for that matter. Make sense? So let's conclude this top 15 list out of the top 15 fastest growing U.S. cities, the latest numbers according to Forbes. Let's discuss whether we are presenting, whether we're selling homes in those areas, right? And so let me click on here, and you'll see number 15 is San Antonio, New Braunfels, Texas. Population growth from 2014 to 2015 is 51,000, and the total population is a whopping 2.38 million people in population, right? San Antonio. So we have great homes there. We've been promoting San Antonio for a while, for the past, off and on for the past 10 years. And right now we have duplexes and fourplex and sixplexes, multi-units, very new or brand new constructions, right? In a great rental area. So again, we have the representation in San Antonio, great market to invest in. All right, and then of course we have Austin, right? Silicon Valley of the South, right? Silicon Valley 2.0, number 14 on the Forbes list, and they have 2 million people already in Austin Metro. And we have single family homes there for like 180K with Ken Venner, our partner there, and we have duplexes with our partner Sean Little, $350,000 brand new, very nice looking duplexes in the suburb of Austin, which is in Bastrop. Texas. Okay, so see, now you know the kind of research and due diligence that we do on the behalf of our investors. We go where the growth is at, and you're gonna for the future, your investment is gonna do very well long term. And of course, number 13 is Tampa, St. Petersburg, Clearwater. And through Jim Gillum, we've been promoting Tampa for the past year, and we will continue to do so. That's a very, very kind of a best kept secret, if you will. Tampa, it's not it's not mainstream yet, but to a lot of people, but to us it is, and we feel very strongly about Tampa. We have great duplexes and multi-units located in Tampa with very, very high cap rates, very high cash flow. As you can see from our recent inventories that we've been promoting for you guys. So furthermore, we are about to promote. We already promote one subdivision with new construction, new builds with single family homes. In Tampa, we are about to promote another subdivision in the suburbs of Tampa in Huston, Florida, around 30 miles north of Tampa. Very new gated, new constructions that were coming up with 180K price point, very large square footage, single family homes, very good rents, very good rent, around $1,700 to $1,800 monthly rent. So we're very excited to promote that, and of course Jim Gillum will provide more details shortly. So Tampa, number 13 on the list, and is moving up very fast. Believe it or not, you'll be surprised. They almost have 3 million people there already in the Tampa, St. Petersburg, Clearwater metro, part of the Central Florida uh, thing that we do. All right. And I'm going to skip over some of this. We're not going to go to Denver because, again, the price point is too high. It's not a sweet spot. You will not cash flow based on the rent versus the price ratio. So let's skip number 12. Let's skip number 11. Massive overvalued prices in San Francisco Bay Area. You overpay for a very, very bad looking house. It just that's the way it is. I mean, it's a good area, a lot of good jobs, and growing population, but the cost of living and the real estate prices is just so outrageous. So not for investors, especially for beginners or even for savvy cookie cutter investors, mom and pop investors like like most of us, right? All right. So let's skip that. And of course, number 10 is Orlando, Kissimmee, Sanford. This is part of Central Florida. We've been promoting this through Jim Gillum for the last several years, and many of our investors have purchased single family homes, duplexes, fourplexes, whatever, and they are doing very well with their purchases, and the cash flow is extremely high. A lot of potential appreciation. We love Central Florida, Orlando in particular, for many, many good reasons. Number 10 in population growth according to Forbes, and already have 2.38 million people. Wow, amazing. That's number 10. And we're not going to, although Seattle's doing fine at number 9, but the prices are, the median price of a home in Seattle is already at least 500, maybe even $600,000. So not a good area to invest because of the, once again, rent to value ratio does not make sense. You will not cash flow. You will overpay for houses. And I know it's a lot of high tech in Seattle area. That's fine. It's nice to maybe live there, but I would not invest our hard-earned money in an overvalue market, Seattle. Okay, and of course, Washington D.C. is also very, very expensive. It's not a investment area for most investors. Okay, so let's skip that. And similarly with Miami, okay, there are a lot of condos, a lot of homes costs. It's very, very expensive. They are the playground of the rich and famous. And we are not the rich and famous. Most of us, that is. And number 6, same thing. LA is growing very fast. The prices of homes is really doing a lot of people there. 13 million people in the LA metro. Again, it's not a good place to invest due to the prices are so high. cash flow is you can have a negative return in terms of cap rates and cash flow. All right, so let's skip Southern California. Obviously, New York, extremely expensive, playground of the rich and famous, very, very expensive, not a good investment area based on the numerical criteria that I discussed with you guys. Phoenix used to be 4, 5, 6 years ago. We promoted Phoenix, single family home, way undervalued, a lot of foreclosures. Now it's all gone. All the foreclosures has been purchased, has been absorbed. For those of you, my members that purchased there, you did well, but not going to cash flow that much at all right now. Break even cash flow. So prices are rising in Phoenix. They are number 4 on the Forbes list. They have almost 5 million people, just as many people as in the Bay Area, believe it or not, in Phoenix Metro. But again, not a good investment area because it does not meet the 1% price to rent ratio. You may get break even on a 25% down payment. So the return is very, very low. So at least we're not promoting single family homes investments in Phoenix area. Maybe something else, but not single family homes. All right, that's number 4. And number 3, Atlanta. Uh, it was good. I should be promoting Atlanta. It's still the median price of homes in Atlanta is still relatively cheap. So there might be some cash flow possibilities there. Who knows? But right now we don't have any representation there. And number 2, according to Forbes, fastest growing cities is Dallas, Fort Worth, Arlington, and they have a population of 7 million there. They're bigger than Bay Area, and Dallas is doing very well, high tech uh, and and retail and just financial services. It just transportation, distribution, very diversified economy, massive growth, and of course we have duplexes available to sell. $350,000 brand new duplexes as promoted by our partner Sean Little. All right, so very fast growing. So we're proud to represent the top, the number 2 market according to Forbes, fastest growing Dallas Metro, and of course number 1 still fastest growing city is Houston. All right, and again we could promote Houston single family homes, still cash flow pretty quite decently. So we might look into Houston to represent there someday soon. All right. So there you go. The top 15. Out of the top 15, we have, I don't know, forgot how many. We have maybe half of the, not half, 1/3 of the top 15 Forbes 2015, 2016 population growth, fastest growing in the country. We have properties uh, to sell to you folks out there. So that's the main criteria to become successful as an investor. Buy in a good area, location, location, location. Number 1 criteria is the fastest growing city, fastest growing in terms of jobs, and we have those properties available. All right, so this hopefully this helped once again from a high level, macro level kind of perspective analysis, and another way for us to educate you, get you informed to buy, to live where you want to live. Many of you in California, that's fine, but purchase when the numbers make sense. The numbers in terms of capitalization rate, in terms of cash flow, in terms of cash on cash return, in terms of total return on investment, the market that we have representation among the Forbes top 10, top 15 that is, of fastest growing cities. And we're proud to have this great menu of properties in those great areas to sell. Okay, thank you so much for your time and looking forward to working with each and every one of you to help you achieve your financial goals. My name is Seewing Yee from the Yee Real Estate Network. Thank you for attending and have a nice day.